This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Refiners across the globe are reaping unexpected profits from producing key fuels in recent weeks, offering an ailing sector respite before an anticipated weakening later this year, as plant closures have tightened fuel supply needed to meet peak summer demand. The strength in fuel markets contrasts with crude oil prices falling to a 4-year low in May, after OPEC Plus unwound output cuts faster than planned. It also suggests demand has so far proved resilient despite ongoing concerns about the impact of tariffs. Refining margins reflect the profits a plant makes from processing crude oil into fuels such as gasoline or diesel.
Saudi Arabia and Russia had to reach a difficult compromise on OPEC Plus policies on Saturday as Riyadh pushed to accelerate oil output increases while Moscow argued for a pause, 4 OPEC Plus sources with knowledge of the talks said. Tension between the two most powerful OPEC Plus members is simmering after a few years of smooth cooperation. The last time Moscow and Riyadh clashed on policy was in 2020 when all OPEC Plus members pumped at wool and oil prices crashed. On Saturday, 8 key OPEC Plus members agreed to raise production by 411,000 barrels per day from July, after agreeing the same-sized increases in output in May and June. The group is unwinding voluntary cuts put in place over the past 5 years to support the market.
Moving on to the top news in the energy sector.
Eastern Europe is often overlooked in discussions about solar power generation in Europe, where the likes of Germany and Spain dominate the growth in deployed solar electricity production. But solar capacity across the 9 largest solar producers in Eastern Europe has grown at over twice the pace of Europe as a whole over the past 5 years, and has helped Eastern Europe double its share of regional solar production since 2019. At least 6 Eastern European nations will generate over 20% of their total monthly utility-supplied electricity from solar farms this summer, when regional solar radiation levels hit their annual peak.
President Donald Trump's budget proposes to shut as soon as in a few months the Northeast Home Heating Oil Reserve, which stores 1 million barrels of diesel and was designed to protect consumers. The reserve, created in 2000 by former President Bill Clinton, holds enough for roughly 10 days of heating homes. It has not been tapped since 2012, when it provided fuel to emergency responders in the aftermath of Hurricane Sandy. The proceeds of a sale of the ultra-low sulfur diesel in fiscal year 2026 would go to U.S. deficit reduction, the proposal said. At current prices, revenues from a sale would be about $86 million, but closing the facility could save on maintenance costs. Next, we have the top news in metal markets. U.S. copper futures jumped on Monday, widening their premium over London prices, amid speculation about possible new import tariffs after U.S. President Donald Trump said he would double tariffs on aluminium and steel imports to 50%. The most active U.S. COMEX copper futures hit $4.9495, the highest since April 3, and were last up 4.0% at $4.8625 a pound. Benchmark 3-month copper on the London Metal Exchange rose 1.2% to $9,607 per metric ton by 1600 GMT. Although copper wasn't even mentioned in Trump's latest announcement, markets are clearly pricing in the risk of import tariffs following the February investigation, said Panmure Liberum analyst Tom Price, referring to Washington's ongoing probe into possible new tariffs on copper imports.
Premiums for consumers buying aluminium on the physical market in the United States soared on Monday after U.S. President Donald Trump said he planned to increase tariffs on imported steel and aluminium to 50% from 25%. The U.S. is heavily reliant on aluminium imports. About half of all aluminium used in the country for transport, packaging and construction is delivered from elsewhere, with the vast majority coming from Canada. The new tariffs are due to take effect on June 4. Buyers on the physical market usually pay the London Metal Exchange benchmark aluminium price plus a premium covering taxes, transport and handling costs.
We will now look at the top news in the agricultural sector.
Chicago wheat slid on Tuesday, giving up some of previous sessions' gains, as improved U.S. crop condition weighed on prices, although intensifying Russia-Ukraine war limited losses. Corn fell to its lowest level in 6 months, while soybeans inched higher. Any news of improved production prospects are going to be bearish for wheat prices as we get closer to the harvest in Northern Hemisphere, said a Singapore-based grains trader. The most active wheat contract on the Chicago Board of Trade fell 0.7% to $5.35 minus 1/4 a bushel, as of 0415 GMT.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.